How you doing, everyone? Welcome to an episode of Krypto Playboy. My name is Simul. Guys, to begin, like the video, subscribe to the channel, and stay tuned for more content coming out. And do not forget, hop on the Discord, tips, pre-sales, and the world's best community in there. Okay, that's not biased at all. Honestly, it's the world's best community. Let's get into today's episode. All right, this is a project I've spoken about in the past, guys. If you're in the Discord, you would have known about this because this is a very special one. And guess what? We have a very special team coming on the show. That's right. It's the SolStreet team. So we have them on right now. Get this link open and we'll get you guys started. All right. How you going, boys? Can you hear me? We have Jeff and Alexis on the show today.
Yeah, great to be here.
It's good to have you on. Well, a lot of feedback from people saying we want to hear from the team. Get them on. And lucky we did. Here we are now.
Full disclosure, there's only two of us. There's still a bunch of us that side and who couldn't join. So
they sent the best looking ones.
I think hair was a predetermined prerequisite for the show.
Instead of being on the show today, everyone had to have a hair at least this length. So we all made it. I'll get straight into these questions with you guys if you don't mind. Tell us, what is the origin of SolStreet? Like, where did this idea come from?
Yeah, I'll take that one. So it came from our incubator. So we were incubated by a company called an asset manager called Invictus Capital. And they, on their proprietary trading desk, did weekly DeFi sessions. And guys were quite amped about sort of DeFi asset management protocols. And at the time, there was DHedge and Enzyme, and it was just super expensive on Ethereum, as we all know back when the networks were really congested. Cost you $1,000 to set up a fund, and they were toying with the idea of launching something like this on a cheaper chain, and Solana came out and kind of made a perfect fit. And they decided, cool, let's try to put together proof of concept and see whether it works, see whether we can do it on the Solana chain. And that's kind of where it all started.
I like the name as well, SolStreet. It's kind of like that Wall Street feeling to it, but in a better place in the blockchain.
Yeah. A behind the scenes tidbit is we were originally called SolStreet Finance, which is, there's the Sortino ratio, but that we thought would probably go over the heads of most people. So we went with what I consider to be the much superior SolStreet.
I think you won on that one. SolStreet sells a much better, sounds better, flows better, everything. So good choice on that. So what was the reasoning behind using Solana as a blockchain?
So I mean, I touched on high gas fees. That was sort of the initial let's explore other options. But really, gas fees are only one of the problems. Composability and what Solana offers is probably the biggest benefit that you get from there. So obviously you've got low cost, high throughput, but it's what they're doing with parallelized processing and the composability that operating everybody on a layer one kind of gives the project. So within DeFi, you really sort of grow your value by the more sort of integrations you can have, and that you becoming sort of a core primitive within that money Legos. And Solana, with everybody operating on the same chain, we can do very cool things like integrating our protocol. So asset managers can use spot trading, spot margin using Mango markets, perpetual futures with leverage using Mango markets. And then we can scale out vertically into Zeta markets for binary options, and just literally as far as we can go. And we can know the state of the chain and of each one of these protocols within one transaction. Whereas with Ethereum, even with layer 2 scaling, if we wanted to use something like DYDX for on-chain perpetuals, they operate on Starkware, which is a layer 2 scaling solution that sits in its own database somewhere and then reconciles back on a sort of higher time frame back to Ethereum, and then you can only see what that state would be. So an integration like that becomes impossible in the current state of Ethereum. And Solana is just absolutely amazing. Like, yeah, I can't stress it enough. That composability is just, yeah, rocket fuel.
I've heard that from a few guys in the past, all saying like Solana seems to be that chain that DeFi is really moving towards, because it has that space to grow on it. And, you know, DeFi is tiny at the moment compared to traditional markets. So when that money, you know, that movement comes into it, it needs to go somewhere. And you can see Solana being able to handle that. So good choice on there for you guys.
Yeah, and that's a big factor as well, because it's not, you know, composability, interoperability by themselves are, you know, not that significant unless you have other good protocols on the same chain to integrate with. And so Solana's momentum in that respect was super important too.
You guys done your research on this. So also, you guys have chosen the Serum DEX. There was some reasonings behind that.
Yeah, so I mean, Serum was like the sort of like the core primitive to bringing DeFi into Solana. So like Solana was another layer one, like people termed it as the ETH killer. Like I'd say it's a complementing protocol more like it, but and has its own use cases. But without that central sort of limit order book and liquidity pool, DeFi is kind of impossible. And Serum, so obviously they started building that out, and that's sort of the biggest pool of liquidity on Solana. So it was a no-brainer to integrate with them. We have since then done a number of other integrations. So we use a complementing like of Serum's limit order book, and then we also use Orca for like a simulated automated market maker type experience. So we route some transactions through Serum and some transactions through Orca. And we will over time increase that whenever we see the need for another tool for our fund managers and for the protocol. But Serum, yeah, is just like that's where all the bulk of the liquidity is going to come in.
It kind of leads into my next question. I was going to say, is there options in the future to expand to other DEXs that come along or other tools that come out in Solana?
Yeah, so I mean, we started with the Serum DEX. We built our proof of concept on there, and then started sort of scaling out this vertically scaling, like giving essentially the way I see it is like we're giving our fund managers tools to create returns for the investors on the protocol. And the first tool we gave them was Spot on the Serum DEX, and then since then we integrated with Mango Markets, which gave them spot margin and perpetual futures contracts. That was the next integration. And then we included Orca so that we could do AMM style swapping. And then we do have like a long roadmap of other protocols that we're busy looking at and selecting and prioritizing. And those will sort of roll out over the coming months and years. And wherever we see an opportunity to offer our fund managers another tool, we'll then go down the route of doing the DD on the protocol and looking at doing that integration.
Oh, it's great to hear, guys. I like this. This is like for everyone out there that's watching this. Compared to traditional asset management, how does this compare to it? Like, how does SolStreet open the door to these traditional investors?
Yeah. So let's take like a hedge fund as a comparator here. If you want to invest in a hedge fund, first of all, you have to have a lot of cash to do so. There are minimum investment thresholds that range, but can be in the order of $50,000 US, $100,000 US at a time. So really not a very accessible investment vehicle to the layperson. Then even if you qualify for that, in investing with them, you have to transfer custody of your funds to the fund managers, which requires you to trust them and you know have faith that they're gonna follow through with the fund mandates that they've communicated to you. So you're giving over the ownership of your funds, and then the transparency of a traditional setup fund like that is pretty poor. You typically going to rely on a quarterly report, you know, maybe a monthly report if you're lucky, and they're a very communicative asset manager. But essentially, you hand over those funds, you lose sight of them, and you kind of trust that they're going to do the right thing for you from that point forward.
Pray for the best.
And then, of course, there's going to be a management fee slapped onto that service, which is, agnostic of whether they make money for you or not. They're performing the service. They're an expensive business to run with all of their own overheads, and so they have to do that. So all of those factors we've tried to essentially flip on their heads with SolStreet. So where it's expensive to invest in a hedge fund, we make it such that there's no minimum investment amount for you can come onto our site, set yourself up a phantom wallet, and deposit $10 in there and experiment with that. Throw it into a handful of different funds, no problem. Or you can do $1 million at a time. So it is for everyone in that respect. Then one of the kind of really core foundations of what we are from a technological perspective is that we enable non-custodial fund management. So this is where the blockchain of it comes in, and through our smart contracting, when you invest into a fund, the fund manager actually does not take custody of your funds, and it's within your custody, accessible to your wallet, withdrawable at any time. So you're preserving ownership of your funds while enabling someone else to execute all the required trades that they need to in order to help you make money. And then while that's ongoing, you can watch those trades happen live. You can withdraw at an instant, any moment, and depending on the fund, they have some choices as to how they set up their fee structure, but there's not going to be a management fee to you as an investor. There'll be some version of a performance fee, which means that instead of being charged for them to perform this service, because they don't have those same expensive overheads that a hedge fund does, they can rely exclusively on a performance fee, which means you only are charged for money that they make on your behalf, right? So that's the broad stroke kind of traditional finance versus our DeFi reinvention of it all. Did I miss anything there?
I think, yeah. Well, one big thing for me is the borderless. The borderless aspect to it is growing up in South Africa, like trying to invest in stocks. International stocks is a very difficult thing to do. It's easier now, but back in the day, it was like a 10,000 Rand deposit. If you're lucky, normally about 100,000. And this is sort of like hedge fund level. And as a young teenager, trying to play around and invest in FANG stocks and stuff like that, it's near on impossible. And this opens up that borderless access to funds. So anybody from anywhere can really invest. And to touch on the fees, at the moment, it's a performance fee, but this is also something that will evolve over time, and different fee structures can be voted in through governance votes, and the community can decide maybe the different types of revenue models or fee structures they would like for funds, and different funds can have different fee structures, but all configurable on the base layer, on the protocol layer. So very cool.
No, I think it's the borderless thing is a massive thing, because even here in Australia, to set up a trading account, if you want to trade the markets in the US stock market, it's a 4 to 6 week process just to get it set up and get some funds in your account. And then to withdraw those funds, you can be waiting 8 weeks here. I know it's happened to me. It was I think it was a 9 or 12 week wait. I had to get my money out of it. And if I sold them sitting there, and by the time I got to my account, it was forever. So these type of things, the blockchain, I think, can revolutionize it for people. So I love it.
Yeah. You get hammered with that monthly service fee, but by the time you've just had just funds sitting there for a few months, you're down 15%. Come on.
Give me money. I know we kind of touched on the fees, but could you maybe break down the fee structure, simple terms for people, for the investors and for funds?
Yeah, so as Alexa said, it's something that will evolve, and as we kind of mature as a protocol, and eventually become a revenue generating protocol, these things may need to be subject to tweaks. But as a principle, we are looking to minimize fees. The optionality we give to a fund manager is to determine what their performance fee is. So if they are really confident in their strategies and their track record which in our context sits immutably on the blockchain. There's no way to claim a track record you don't have. If they can show a really strong trading history, they could set a high performance fee and quite easily justify that because it's money coming off of extra money made, right? So there'll be a performance fee that an investor is subject to. At the protocol level, we will charge some form of a transaction fee based on which of our integrated protocols you're transacting on. So it'll vary slightly based on whether you're running a Serum spot trade or a Mango, leveraged perpetual trade, but it'll be on a per transaction basis with discounts available based on the volume of transactions that you run through your fund. But as far as the investor is concerned, when they hand over the reins to a fund manager, it's essentially just the performance fee.
Nice and simple. I like it. And can just anyone set up a fund, or is there some hoops they have to jump through?
Yeah. Anyone
with a Solana wallet. It'd take you like 20 seconds to set up a Solana wallet using like Phantom, third-party wallet provider, and then anyone in the world with a Phantom wallet and a tiny bit of Sol to set up your fund can set up a fund. So
So in saying that, anyone can set one up. How do you guys help protect someone like joining some guy who has no idea what he's doing and he's running a fund in there?
I mean, we don't stop that from happening, right? That's part of the, it comes with the territory of making this thing open and borderless and accessible to anyone. In a sense, the sort of fundamental dynamics of economics are a safeguard against this, because if you open a fund, you have no idea what you're doing, you're most probably going to get wrecked, and that will be there to see, right? For anyone who looks at your fund, and on our website, you can sort funds by their performance over different time intervals, right? The people who don't know what they're doing might have a lucky day or two. Like myself, I've run some funds that have at some point performed quite well, but I would not consider myself qualified to really do so. Essentially, they'll all come out in the wash pretty quickly.
Yeah.
That said, if you take the hypothetical of someone not knowing what they're doing and still managing to succeed over a longer time horizon, then that's sort of okay. And if people invest into those funds and ride that good fortune out, they can always withdraw instantly, like we mentioned just now. So that's kind of a safeguard, and they can see transparently what's going on at all times. So it's a small risk, like it is with any asset management relationship, but it's fairly mitigated. And at the end of the day, you have to be as skillful a trader to run a fund into the ground as you do to get it to ride it to the moon, because you have to be able to essentially make the right decisions. So it's a relatively small risk and a quirk of having this open system.
So, but a way to look at it as well is just to sort of like abstract SolStreet away from it. Like we're building a protocol, and we're building a protocol for anybody to set up non-custodial funds. Like SolStreet is merely a front end to that protocol. The protocol lives on the blockchain, and the way we see it is we progress over time, but in the future we believe that like big asset managers will be moving their funds on chain, and they'll be using a protocol like SolStreet to provide that full visibility and auditability into their protocol. Saves them costs. It provides that extra level of trust, and they're going to need somebody to build their fund on top of. And we see, like in the long term, a protocol like SolStreet can become that, because we eventually neutral and decentralized, DAO governed, and this non-custodial asset management protocol. You have that neutral protocol that somebody can integrate with. So then there's that level of trust. It's just a layer on top of the Solana blockchain, which essentially gives you all of your accounting, all of your fund management tools that you then generating that yield on top of.
So this comes down to one thing for people. Whoever's using it should also do their research. If you see someone has horrible trades, don't use that fund. That's half obvious.
Yeah.
Yeah, people always like to blame someone, but sometimes it's themselves the best person.
Yeah.
This is another thing. So I had a question for me. So STRT, which is the SolStreet token, for everyone out there, that's the native token. How does this tie in with the SolStreet protocol?
You want to take that on?
Yeah, sure. So it's the core sort of value accrual mechanism within the protocol. So the way it works is the street token, all the holders are protocol owners and can contribute towards governance. But the way we've set up our token, which hasn't launched yet, but when we do launch it, it works. It works as follows. So you hold street tokens, but if you merely hold them and speculate on the price going up, we don't really want to reward those people because they aren't really contributing towards the growth of the protocol. So we use a variation of the sushi model with the X sushi. So where if you have the street tokens and you stake your street tokens, then you can share in protocol revenues. So this way, the protocol then buys street tokens off the open market and then distributes them to the X Street token holders. And with X Street, you can participate in governance, so you can write up proposals on changing the protocol, and you can vote on proposals to change the protocol. And then as a way to align long-term thinking with protocol development proposals and voting, we then incorporated a variation of the curve model of the locked, so the VECRV. So we've got a VX Street. So this gets kind of complex, but anyway, it's just a way. It's a way to like boost your voting power. So we want somebody who says, okay, cool, I'll lock up my tokens for a year. We want to give you a slightly higher power when it comes to voting, because you've essentially signaled by locking it up for a year, saying, cool, I can see a year in the future, and I believe that this protocol is going to be around for another year. So I'm going to vote with that in mind. If I lock it for 4 years, I've got a sort of 4-year time horizon with the protocol. If I'm just holding it for number to go up, it's like, yeah, you're probably going to dump it when you make your return, and like you don't believe in the long-term vision of the protocol. So we want to align the long-term voting and power of protocol improvements to those locked ones. So that's where the locked tokens come in, and then obviously the token holders of the staked and locked, they will then be rewarded in a portion of the protocol fees, and that automatically accrues back to those staked token holders. At its core, that's the starting point to the utility of the street token.
So essentially, the more deeply committed you are to the protocol, either through using it as a fund manager or an investor or both, and the longer the time horizon of that commitment, the greater reward you'll get from holding street tokens, and the greater the incentives of our whole tokenomic model play into your hands. As Alexa said, to just avoid being another speculative token that launches and dumps, and that's not what we're looking to achieve.
That's right. If you guys support the project, you deserve the returns. I hate some people complain, I didn't get nothing out of this. It's like, you just dumped your token. Like, if you want to support it, lock it in there, stake it for 12 months, 24 months. Believe in it. And then there was the people afterwards like, oh, I should have held the token, or you should have supported them earlier.
Yeah.
And so does that kind of tie in with the SolStreet performance mining program?
Yeah. So this is sort of one of the core sort of flywheel mechanisms that we've incorporated into the token and into the protocol. So initially, you've got this problem where you've got, like, we're a marketplace. We're a marketplace for fund managers and for investors. Investors to find funds that generate yield, and fund managers to set up their funds. But we need to attract liquidity. We need to attract fund managers. We need to attract investors to this marketplace initially. So that's where the performance mining program comes into play. So we've allocated 50% of all of our tokens towards this performance mining program. And the way we see this is it's a way to bootstrap a community. It's a way to bootstrap fund managers and investors and to distribute the power of protocol governance to the people who are contributing towards the protocol. And this 50% of the tokens will be allocated to funds based off of performance. And there's a bit of a complex sort of like calculation and algorithm that goes behind that. But at its core, it's sort of generate yield and qualify for the performance mining. And some of the 50% of all supply will be allocated towards that fund and the investors in that fund based off of a calculation. And this happens then on a regular basis for the next 10 years. So over the space of 10 years, this performance mining program runs. This is up to governance proposal changes as well. So if the community believes anything in this needs to change, the algorithm needs to have a tweak to it, that will then happen. But what this does then is this distributes 50% of our token supply out to our community, to our investors, to our fund managers, and to the people contributing towards the future growth of the protocol. And this is very important to us because there is no protocol without investors and fund managers. So we, by far, the largest amount of tokens has been distributed out to those users of the protocol, and we're rewarding performance. So we want performant funds on the protocol. We don't want a bunch of guys generating negative yields. So that's sort of like your qualifying criteria. Yeah,
which is pretty awesome. I mean, like this is a pretty archetypically DeFi thing to do, is kind of put ownership in the hands of the community and the users. And it's I mean, a couple of years ago, this sort of thing would be unprecedented. If you imagined like the iStore or Google Play Store, right, saying to any app developers who come and launch an app on their store that they are entitled to up to 50% of the shareholding of Apple or Google respectively. That's kind of like, it's mind-blowing, right? Like you couldn't even conceive of it. Never mind the opposite being true with like predatory fee mechanisms for those app developers, right? In our case, we're saying, let's all win in this together by pushing ownership out to people who are really going to help enhance SolStreet over the long term and make a seriously good place to come and do DeFi investing.
And that is very fair, because I think if you have a good community, you build a great project. You guys are onto a winner with that, because they'd be stupid not to support something like that. That's a perfect example. If Apple gave 50% to the app developers, there'd be a lot of billionaires out there.
Yeah, big time.
Now there was one bit of confusing thing, people. I think it's the ranking algorithm. Is there a simpler way you guys can explain this? Is there some figures and maths in there that goes over people's heads, and break it down?
So I mean, like, I guess I mean, it's using a couple like finance nerdy calculations in there, but at its simplest, it's taking your performance, your total value locked in your fund, and time into consideration, and it's adjusting that with a risk-adjusted return based off of sort of like a market, expected market return on just like hodling, and that then gives you a ranking algorithm, which is what that street score is. It's not ideal. Like it's also going to like evolve over time. It gets better. It gets better over time as well. Like the more time it has to run that calculation. So it's just one. It's one metric that we're trying to use, because when you've got 50 funds, it's fine. You just sort your leaderboard by 50 funds. You can do it by whichever metric you want. Easy to filter through that. When you've got like 1,000 funds or 10,000 funds, it becomes very difficult to like isolate performing funds within 10,000 funds to like allocate some of your investment. The street score is one of those tools which will help you identify those funds. When we launch the token, there will also be a metric that will give you an idea of the fund's overall like voting power and token holdings, which will also give you another signifier of like this fund is a long-term thinker and a performance fund, and it has a good street score, which would be another sort of like filtering metric to help wade through 10,000 funds. But yeah, in short, like total value locked, AUM, your performance and time, and then risk adjusted.
Which also sort of ties back to your earlier question about fund managers who kind of just take a stab, not really knowing what they're doing.
Yep.
This is a sort of SolStreet stamp of approval ranking algorithm that's not just based on how you might have performed in the last 24 hours, as much as some more kind of solid variables that we take into account for the street score.
And again, not financial advice, and like don't go base your investment off of a street score. Like it's like a filtering mechanism. It's like if it's got a very high street score, like it still doesn't mean you should just go YOLO like all your funds in there. Like do your own research, diversify your risk. We're just trying to build tools to help like wade through the inevitable, well, the hopeful 10,000 funds that we have to put to the protocol eventually. So yeah.
Well, your project has been gaining a lot of traction. Like when we heard about this, it's massive, and you got some investors coming on there, and you guys are closing up a private round very shortly. But no one's heard about the investors on the project. Like, are you guys hiding something from us, or are you waiting to reveal something? Like, building up to what's happening?
Yeah, I mean, everyone loves a little bit of cat and mouse, teasing. But we've been raising for a little while, and we're pretty close to closing this private sale, as you say. It's actually been a wild ride because there's been a lot of stuff happening in the world over the last few months.
Yes.
And not just the crypto world. There was a week where we were kind of at our height of chatting to VCs, where Alexis and our protocol lead Hein had several dozen calls lined up for the week, and then the first military action was taken in Russia, Ukraine, and literally within a couple of hours the calendar just became blank again. All of these VCs were just in hiding once more, and that's the tricky thing about being in crypto, is that a lot of the capital sits in crypto tokens. So when the market contracts, when you enter bearish times, then there's just not as much cash to go around. So it's been a fun challenge, but we will soon be unveiling the whole cohort of investors. I think a little more than the public does at this stage, and
just a bit.
Some of our investors are known, but we've got some pretty badass investors, and one of them may or may not be a huge listed company. So
tier one VC investor in the crypto space.
Tier one VCs.
Maybe or not. Maybe not. I don't know.
Yeah, possibly
just keep an eye out on our socials, and the announcements will come out soon. But
yeah. I mean, essentially, the next few months, the last few months have been
horrible,
essential. Well, horrible
for the market.
But in just our little SolStreet world, we've taken our product from its V1 being a solid proof of concept through to what's now being tested with our community. Our V2 is just an order of magnitude more sophisticated and useful. And yet the next few months, I think, have in store much more for us than the past few have, because it's where we're really going to become the true version of what we want to be, a protocol operating with a live token and an uncapped fund management toolkit. So that, among other things, the VC announcement is going to be one of the tools we use to sort of start building the momentum in towards that token launch and our soon to be also unveiled NFT drop. So plenty good things to come.
Dropping all after.
Yeah.
Just tease after tease. You got to let something go. Like you guys are a very passionate team. Like from I've seen from following the project along, even the community you guys are building up. You guys are very passionate. You support what you're doing. What excites you most about this? Like you guys always seem excited. I've never seen a down moment in the team.
Yeah. You want to talk about the product bit?
Yeah. I mean, like, yeah. There's some, like, I'm head of product, and like the techie side, like gets me all excited. But I mean, like, the biggest thing is the borderless, like the borderless access to funds to this protocol. Like that really like gets me super excited. Like growing up in South Africa, like we've been pretty isolated from those types of things. Well, for like up and coming like inquisitive type person, it's very difficult to access, and we've got exchange controls and all sorts of other things that make it difficult. And then on the core product, like we've been, one bonus to like your VC fundraising calendar like drying up is like suddenly I don't have to like take VC calls and we get to like focus on building. So that's pretty cool. We've been building our asses off, and we've built some very cool like solutions to problems that no one else has managed to solve on the Solana blockchain, for instance. Like our funds, we have an unlimited amount of assets that you can invest in a single fund, and an unlimited amount of protocol integrations you can do in a single fund, which was a limitation because of just something core to the way the Solana blockchain is built, which really makes it like a difficult thing. Like out of the box, it's difficult to have more than like eight different assets in a single fund, and this has been sort of like true to multiple protocols. We've come up with a novel solution to that, which allows us with a V2 that we're launching with the Mango spot margin and perps. It enables us to do 10 Mango assets and 10 Serum assets. So we've got a total of 20, and that's just as a starting point. We've limited that on the protocol level, but we can very easily scale that out to like hundreds of thousands of assets. Tens of thousands of assets. So I'm super excited about that. I'm super excited to like actually get that out further than our community testers, which are currently testing that, and just like open access to finance. Like that's why I'm in this space. Like, yeah, I don't dig the banks.
Don't get started on talking about banks. We'll be here for another hour and a half.
Yeah. So yeah, super excited about that.
But also, I mean, this isn't product specific, but to zoom out, I mean, the last couple of weeks in particular have been tough if you're in crypto. We personally, people on our team have taken huge losses with the whole Luna setup. I wasn't gonna mention it, but seeing as he's pointing at himself, it's been hard. But the crypto market, if you compare it to traditional finance, is just a sliver of what it might be. And for us personally, the asset management like industry within the crypto market is tiny. Something like a third of all assets in the global asset universe sit in managed funds within traditional finance, and in crypto that's at like 1.5% of the crypto market cap is in any sort of managed crypto fund. And so not only is the crypto market, we feel, going to be see immense growth over the next decade or two, but the proportion of assets within that space in managed funds is going to grow immensely. And for people who are going to come into the space over the years to come, it's going to be complex to figure out how to profit from entering into crypto. And we hope that SolStreet can be part of making that easier for them by connecting them to smart fund managers and top performing funds.
Well, it's really good to hear, everyone. I love everything you have to say. I've loved following the progress of this, and I look forward to hearing more. Be sure to have you guys back on the show, because most passionate people we've had on here. It's nice to see. You seem to love it.
We'd love that anytime.
I've got one more question. I think everyone else already is probably thinking this. I know I've asked you before, but that's not a green screen, whoever's watching this. That's actually a real push in the background.
It's real. It's real.
It's the real deal.
Someone's going to ask me that, so I had to say it. No, that is a real bush deal. I like it. Well, I thank you guys for today for your time. If anyone has any questions, please send them to me. Get you guys back on later in the future, because I think it'll be great to follow the progress of this and see how we're going. Especially if we come into a bull run, I think everyone's going to be wanting some more SolStreet, and be able to follow a good fund manager like that and find a good one in there. People are going to be loving that. So good job for everything you guys achieved so far, and I wish you all the best of luck with the future of it. Yeah, thank you for your time.
Really appreciate that.
Yeah, and if any of you guys want to find more information about you guys, I'll chuck your links down below. Website's up there, and talk to you guys in there, right? Get active in your community.
Yeah,
Awesome.
see you on Discord.
Yeah, thanks for your time, boys. I'll catch you soon.
Cool. All right. Cheers. Thanks a lot, man.
See ya.
Ciao.
There you go. The SolStreet team. You guys want to find out more? Hop onto the website, read through it all. The white paper's on there, the white paper. Understand what the project is. Repeat this video if you have to, because these guys are very passionate. I don't see many teams like this. They know everything about it. And I love saying that, because it tells me that they've been building on this, they've been working on it, and they understand their project, they understand the need for this. So hop in there, hop on their Twitter. This is the best place for any updates of anything. Follow everything on here. I'm looking forward to seeing this VC list come out, and I think anyone else who's following this project is going to love to see them, and you'll be very excited for it. So guys, don't forget, like the video, subscribe to the channel. Links will be down below for SolStreet. Click them and get involved in it, and talk to you guys all very soon.